Welcome back to the Money Show. And are you a non-resident Indian? And do you wish to invest in India's growth story? Well, if your answer to both the questions is yes, then a resounding yes, then you have come to the right place. Because on the Money Show today, we will discuss how NRIs can invest in India, the kind of investments that they are allowed to invest in, the tax treatment on these investments, and a lot more. So let's get started and welcome on board Shweta Rajani, Head Mutual Funds at Anand Rathi Wealth Limited, and let's take the discussion forward. Firstly, a very good evening, Shweta, and thank you so much for joining us today on ET Now. Let's start with the basics. In financial terms, who is an NRI and where NRI can make investments? What sort of investments are allowed for NRIs in India?
Sure. So, starting with who is an NRI. So, according to the Income Tax Act, if you have spent less than 182 days in India, then you are classified as an NRI. If you qualify as an NRI, a basic thing that is needed to invest in India is you need to have a bank account and you need to have some basic documents in place. You can have an NRO account, right? That's a non-resident ordinary account that you can have. You can invest in, where your income income generated in India can also be invested. You have an NRE account, so you can open an NRE account or an FCNR account where you can invest your foreign currency. So you need to have one of these accounts in place. Second, you need to have your PAN card, address proof, bank account statement, and your passport copy in place to get your KYC and other details done. If you have these two things in place, then you can invest in India.
Okay, Shweta, but what are the various options that are available for NRIs to invest in when it comes to the equities? Can they invest in all the stocks that are available, or they have to do it with a delay of one day? Because what I understand, what my experience is that a couple of my friends who are living abroad, they do mention that there is some barrier in terms of investing. I'm not totally aware. What are those? So any points on that you wish to highlight?
Yeah, you are right. An NRI can invest in the Indian stock market, but there are certain restrictions, on which. So under the RBI's, PIS scheme, NRI can invest in the Indian stocks, but there is a restricted list of stocks in which they can invest into. But that's pretty much a broad list, and it covers good quality stocks that they can invest into. So the universe is not short for them. They have enough opportunities. Second, there are certain other restrictions like, you cannot do short selling, you can't take certain option positions, you have to do delivery-based investments. So those are few restrictions that you have to follow, but that route is available of directly investing in stocks. Second route that you have for participating in the equity markets is through mutual funds. So that option is also available. There are certain asset management companies that do not take investments from US or Canada-based NRIs. Except for that, if you are an NRI based out of UAE, Singapore, or any other country, you have no restrictions of investing in a mutual fund. And then what the mutual fund manager is buying, that again has no restriction. So you'll have more flexibility when you're investing through a mutual fund route in the Indian equity markets.
Okay, but Shweta, apart from stocks, direct equities and mutual funds, the different options that are available in terms of RDs, post office investments, how can an NRI go about these asset classes?
Yeah, so I'll tell you where an NRI can invest when it comes to the debt market and where it cannot. So, you can open a basic fixed deposit, a recurring deposit scheme. You can invest in the debt funds. You cannot invest in a PPF, small savings schemes, national savings deposit scheme. So those are certain places where you cannot invest. You cannot invest in a sovereign gold bond scheme of the government. So those are certain no-nos. But if you want exposure to the debt market from a fixed deposit to a debt fund, those routes are open to you.
Okay, Shweta, now that we have talked a lot about the avenues that NRIs can invest in, and we also touched upon some of the asset classes or some of the areas where they are not allowed to make investments, Then let's come to the taxation part. If they have invested some money in the Indian markets or Indian asset classes, then how are they actually taxed on those terms, and what are the things that they need to be taking care of while filing their taxes?
Yeah, this is a very important point. And, India would have a double tax avoidance agreement with a lot of the countries. So depending on which country you are investing from, you need to you need to check what is the DTAA of India with that country. I'll give you certain examples here. For example, if you're a UAE, NRI, then according to the DTA, you would pay tax according to the UAE laws. So if you've invested in, let's say, equity over here, the Indian taxation is that if you've invested in equities for more than 1 year, then you have to pay long-term capital gain tax at the rate of 10%. But because in UAE you do not have to pay tax, this income would become tax-free for you. Let's say you are an US based NRI. Here, what would happen is the Indian tax rate is 10%, but let's say in US the tax rate is 20%. What would happen is you would end up paying 10% tax in India. The rest of the 10% tax, according to the US tax laws that you're supposed to pay, you will pay to the US government. So what is important is you understand what is the DTAA of India with your respective country and accordingly go with the tax filings over here. Generally, if you're investing in Indian equities, more than 1 year is treated as long term. So that's going to be taxed to you at 10%. Less than that is 15%. If you're investing in debt, then it is taxed as per your tax slab.
Okay, Shweta, as per your experience in the industry, any trend that you're catching up in terms of how the NRIs investments have shaped up in India, how the growth has been, and how the government can actually make the process simpler for NRI investments? Any hurdles that you spot over there?
Yeah. So, definitely India has seen a good amount of inflow coming in from NRIs, and that's mainly to do with the India growth story. Some data points, if I may share with you, that if I look at a longer term holding period, 3 year, 5 year, 10 year, and a rolling investor, which means various experiences, shows that if I just look at the top 20 countries as per the market capitalization, in dollar terms, India tends to fare better than the other countries, which is where over the years we've seen the money flow increasing in India. When I look at the FII share in the Indian stock market, also that's been in that range of 20 to 22%. So that's one thing. Second is the valuations. The Indian valuations are pretty much fair value compared to the relative global market. The growth potential is far higher for India for the next few years. We're looking at India becoming the third largest economy in the next few years. We are amongst the fastest growing economy of the world. So given that the potential is there, we are seeing money flow definitely increasing here. Some of the hurdles, you can have just one PIS account. So that restricts you in a certain way where, if you want to deal with multiple advisors, at times it becomes an issue. So that is one hurdle which the government needs to resolve for. I'm looking at, more from an operational standpoint. The KYC norms are, or the filing norms tend to be a little cumbersome. If that technology can be brought in place to smoothen that, process, then that would be an additional benefit.
Shweta, since you have been interacting to a lot of investors out there, and definitely the double taxation part is something that they really need to take care about while investing in IPOs, because we are seeing a lot of IPOs that are hitting the Indian markets. So, is there anything that NRIs specifically need to take care about?
So when it comes to the DTA, that again is applicable even for your stock investing. So you need to go back and check what your DTA says about, any kind of the tax treaty between the two countries, whether it is you're investing in an IPO, you're investing in the secondary market, or you're investing in the mutual fund. So it's more country specific than investment specific.
Okay, and lastly, Shweta, just want for the benefit of our viewers, how are these NRIs charged in terms of the brokerage? Because they have to make a lot of disclosure and they have to take permissions. They have a limited list of stocks where they can invest in. So, in comparison to the domestic investments, how these NRIs charged in terms of the brokerage? Because I understand that obviously the currency differential is quite higher to compare the same. But in percentage terms, if you can just help our viewers with this.
So actually, this differs from one brokerage house to the other brokerage house, and a lot of it depends on how you've negotiated as well. So, the differential could be, a 5-10% differential between what a regular customer is charged, between what an NRI is charged, and what one NRI is charged versus another NRI is charged. So there's no standard rule over here that would follow. It does differ from one brokerage house to another brokerage house, and how their trading expertise is, what's the quantum that you're going to trade. It all would depend on that. Because if you're going to be a frequent trader, then you'll be able to get a better brokerage here.
Thank you so much, Shweta, for highlighting all these points. But with this, we'll not let you go on that. We want you to stay with us so that just after this quick break, when we are back, we will take all the portfolio-related queries of our viewers with you, and we want you to guide them on the same. So let's slip into a very short break. Don't go anywhere. We'll be right back.